Hi everyone, and welcome back to the channel. Today we've got some major economic and tech news that's going to impact your world. So let's dive right in. First up, some big news on the global trade front. The United States and China have just confirmed a new trade framework, signaling a significant easing of those economic tensions we've all been watching. After high-level negotiations in Geneva and London, the US is set to lift certain trade restrictions, while China will streamline export control reviews for key goods, including those crucial rare earth materials vital for US industries. President Donald Trump himself confirmed this deal, which aims to halt escalating tariffs. Global markets, as you can imagine, reacted super positively, boosting hopes for more trade stability. And keep an eye out, because China's Foreign Minister Wang Yi is also heading to European capitals for further diplomatic talks. This is a big step towards a more stable global economy. Now let's talk about the US economy. The first quarter of 2025 saw a slight contraction, with the US economy shrinking by 0.5%. This was primarily due to President Trump's trade policies. The main culprit? A massive surge in imports. Businesses were rushing to acquire foreign goods before new tariffs could kick in, which had a significant negative impact on GDP. Consumer spending also slowed down quite a bit. While there was some underlying economic strength, federal government spending saw a substantial decline. But don't hit the panic button just yet. Economists are actually anticipating a rebound to 3% GDP growth in the second quarter, suggesting that this import influx was more of a temporary blip. Speaking of the economy, JPMorgan has some interesting projections. They're putting the probability of a US recession in the second half of 2025 at 40%. They've also lowered their growth forecasts to 1.3%, largely due to those higher tariffs. JPMorgan is citing a stagflationary impulse from these tariffs and expects a weaker dollar as US growth slows. What does this mean for interest rates? They anticipate moderate Treasury yield rises and predict the Federal Reserve will cut interest rates by 100 basis points between December and spring 2026, with even deeper cuts if the slowdown intensifies. Shifting gears to the world of digital finance, the Bank of International Settlements, or BIS, is urging global regulators to accelerate official currency tokenization. They're concerned about risks from stablecoins. BIS believes stablecoins, especially those pegged to the US dollar, aren't quite sound money and could pose threats like capital flight, transparency issues, and even impact central bank control. They even pointed to the Terra USD collapse as a cautionary tale. Their recommendation? A unified tokenized ledger that integrates central bank reserves and commercial deposits. Outgoing BIS chief Augustin Carstens emphasized that central banks are absolutely key to maintaining trust and oversight in the evolving world of digital money. And finally, for all the crypto enthusiasts out there, a new report is sounding the alarm for Bitcoin. It warns that Bitcoin faces serious threats from advancing quantum computing. Researchers are urging immediate and long-term protective measures. They're recommending a 7-year transition to quantum-resistant protocols and even a 2-year emergency plan for any sudden breakthroughs in quantum tech. Here's the kicker. Around 6.5 million bitcoins are currently vulnerable due to exposed public keys. Quantum computers could potentially extract private keys and even concentrate mining power. The report also raises some fascinating ethical questions. about potentially burning vulnerable coins to prevent theft. It's a reminder that the digital world is constantly evolving and security needs to keep pace. Now, let's take a look at the economic indicators for this week. Starting off with manufacturing, the S&P Global Manufacturing PMI for June came in at 52, just about the forecast of 51.1. That means manufacturing is still expanding, although at a modest pace. It's a slight pullback from previous strength, but suggests overall stability. The services PMI rose slightly to 53.1. beating the forecast of 52.9. While it's a tick down from last month's 53.7, the service sector is showing resilience, particularly in consumer-facing industries. Existing home sales in May beat expectations at 4.03 million, indicating stronger than expected housing demand. Consumer confidence took a hit. June's reading fell to 93, lower than the expected 99.4, suggesting that inflation and economic uncertainty are weighing on sentiment. New home sales came in at 623,000, well below the forecast of 694,000, and a drop from April's 722,000, a clear sign of cooling momentum in new housing. Crude oil inventories dropped by a hefty 5.836 million barrels, far deeper than the forecasted 1.2 million. This points to high demand or tighter supply, potentially bullish news for oil prices. Durable goods orders jumped a whopping 16.4% in May, nearly doubling the expected 8.6%. That's a strong signal of business investment and demand for long-term goods. Q1 GDP was revised down to negative 0.5%, falling short of the forecasted negative 0.2% and a big drop from the previous quarter's 2.4%. That's a sign the economy slowed more than initially thought. On the labor front, initial jobless claims came in at 236,000, lower than the forecast of 244,000, a sign that layoffs are still relatively low and the job market remains strong. The core PCE price index, the Fed's preferred inflation gauge, rose 2.7% year-over-year, just above the expected 2.6%. Month-over-month also ticked up to 0.2%, again beating the 0.1% forecast. These numbers suggest inflation is still sticky, adding pressure on the Fed's policy decisions. Next week, market attention will be focused on key economic indicators and earnings reports, including S&P Global Manufacturing Services PMI, ADP non-farm employment change, average hourly earnings, unemployment rate, and non-farm payrolls. Meanwhile, several major corporations are set to release their earnings reports, including Progress Software Corporation, Quantum Corporation, Compass Diversified, Movano, Constellation Brands, MSC Industrial Direct Corporation, the Greenbrier Companies, National Beverage Corporation, and UniFirst Corporation. And that's your economic and tech rundown for today. What do you think about these developments? Let us know in the comments below. Don't forget to like, subscribe, and hit that notification bell for more updates. Thanks for watching, and we'll see you next time.